Netflix stock has been on an absolute tear over the past year, up 94%, even year to date, up 42%. And like a lot of stocks over the past month have given some of that back. But the company announced their Q3 earnings after the bell, and we're seeing in the after hours, after we go through these numbers, we'll see, are these numbers good enough for a 36 times forward multiple? We're also at all-time highs. In fact, we're eclipsing all-time highs with Netflix in the after hours. Is it worth starting a position here with Netflix? Or should we sit back and wait to see what happens going forward with the streaming giant? What is going on, investors? Hopefully you guys are doing well out there. Talking about Netflix today, the first of the FANG stocks, if you will, that are going to be reporting their earnings. I guess we'll hear from Tesla next. Now, revenue came in at $9.8 billion. That was 15% year over year growth. And when we look forward with Netflix, we'll talk about the Q4 guidance that they gave here in a moment. But for the most part, Wall Street, low teens growth, or maybe even more specifically, 12% growth for the foreseeable future, at least on the revenue side. So there's your upside with Netflix right away. If they are able to get into kind of that mid-teens growth rate going forward, well, that certainly will give a boost to the stock going forward. But we have to always keep this in the context of a stock that has rallied nearly 100% over the past year, has got north of a $300 billion valuation, and has a price to earnings multiple that far outseeds most of its peers and more or less the broader markets as well. And some of it is very well deserved, because when we look at the revenue forecast that the company gave for the Q4, that will be the upcoming quarter, $10.128 billion. Again, you're going to go sequentially quarter over quarter from $9.8 billion up to $10.1, maybe as high as 10.2, 10.3, 10.4 to the upside. That would represent about 14.7% growth year over year. Wall Street had the revenue at about $10 billion. So the company already guiding above that in the coming weeks ahead. You'll have Wall Street analysts revising these to the upside, maybe getting as high as $11 billion on the upside. Company is doing this all profitably, which in an industry that is struggling for profits and spending more on marketing to acquire the customers rather than replenishing that with revenue, Netflix has done a tremendous job. They are still giving us the global paid streaming member number that stands at about 282 million. That was up 14.4% year over year. And you added about 5 million in the most recent quarter. Although when you look back over the past 3 or 4 quarters, that is the lowest add. So it could be that the company is forecasting that global paid membership is starting to peak. And so they are deciding not to report that number going forward. Now, when we start to look at things globally for Netflix, one of the question marks is, can they continue to inch up price? We didn't get any indication, I don't think, of any kind of price increase from Netflix. They're focusing primarily on their advertising business, which is kind of a lower cost upfront membership. I think it's in the low single dollars here in the United States. And then during the episodes and the shows that you're watching, you do have to consume ads. We did get a preview of the Q4 slate, which looks, in my opinion, particularly strong, but my opinion doesn't really matter. I don't watch a lot of TV, certainly don't watch a lot of Netflix. However, Squid Game Series 2, if it's anything like the first series, which I believe was wildly profitable and watched, that could be a big driver, at least at maintaining membership and certainly growing that as well. The anticipated Jake Paul and Mike Tyson fight, we have to assume that Mike Tyson will continue to go down the path of wanting to return to the ring, and so will Jake Paul. That event, I believe, was delayed earlier this year with Mike Tyson having some kind of medical problem, but it looks like that might have been resolved. And for the first time in the company's history, they're going to be airing 2 NFL games on Christmas Day. So that will be interesting to see how that's absorbed by the marketplace. We'll certainly see how they air those games and, again, how they are received. And in subsequent quarters, what that has to do with membership growth and then potentially drawing in more advertising. We've been seeing this over at Amazon. They're generating more and more ad money, largely because of the NFL bringing those advertisers in for that NFL Thursday game. And then I've read research that they stick around and they advertise on the other programs. Now, in terms of year-over-year growth on the United States and Canada side, just 5% year-over-year on the growth side. And it looks like pricing declined a little bit, as you probably have people opting for the lower cost add to your platform. Now, Europe, Middle East, and Africa seen no growth in the most recent quarter. So I think that flies into the face that you can jack up prices, at least in Europe. Now, in terms of Latin America, you had year-over-year growth down by about 5%. You also saw it on the paid subscription side, down by just a fraction. And then finally, Asia Pacific seen year-over-year declines there as well. On the pricing side, strong net paid addition. So I think it's going to be difficult for this company, at least looking at these anecdotal numbers in the most recent quarter. I think it's going to be difficult to drive up or justify a higher price. And obviously those new FCC rules, which I think go in place in just a couple of weeks, allowing you to cancel subscriptions very easily, requiring companies like Netflix to cancel subscriptions very easily. Although I don't think it's going to impact Netflix as much as maybe other companies that make it far harder to cancel. It will certainly be easier for consumers to cancel. Now, moving over to the financials, they are absolutely sensational over at this company. $9.8 billion we talked about at the top. That was 15% growth year over year. Again, the company is guiding for a Q4 at just over $10 billion when analysts were expecting right at $10 billion. So we could be maybe $10.5 billion on the upside of the revenue. Now, they do this all very, very profitably. Marketing spend over the past year to drive 15% higher sales actually declined. Sorry, this is quarter over quarter we saw a decline, although I do believe sequentially quarter over quarter we did see some small revenue growth. Year over year, though, you went from 558 on the marketing side up to 642. On tech and development, you went from 657 up to 735, and then finally general administrative actually drove that down from 478 down to $417 million. Your operating income off of this nearly $9.9 billion, sitting right very close to $3 billion. You pull down to a net income number. It was $2.4 billion. Last quarter, it was closer to $2.2 billion. And last year, you were at $1.7 billion. So you've added roughly $700 million to the net income side of the business just over the past year. And the company's probably added tens of billions of dollars to their market cap. So in terms of the balance sheet, it looks really good over at Netflix. I noticed they do have some short-term debt that is due relatively soon. That'll maybe slow down the share buybacks. And I tell you what, with shares basically at all-time highs, maybe the company should pull back on that. We'll see that when we get to cash flows. From a long-term debt perspective, the company does have longer-term debt sitting at about 14.1 or nearly $14.2 billion. But you come down here to cash flows, and the company can certainly afford it. From a 3-month basis on operating cash flows, you came in at $2.3 billion. I tell you what, it's a massive improvement over the previous quarter, which came in at $1.3 billion. So you added $1 billion of operating cash flow just in the last quarter. And over the last year, you went from roughly $2 billion up to $2.3 billion. This is operating cash flow. Now, for the 9 months, you went from 5.6 up to 5.8, so some incremental benefit there. So the company, what are they doing with that cash flow? Well, in the most recent quarter, they did purchase some, quote, investments at about $1.7 billion. That's relatively abnormal for this type of company. But what they did mostly is they repurchased common stock. Look at this. They actually issued $1.8 billion in debt, and they promptly went and bought back $1.7 billion worth of common stock. So it looks like to me the company borrowed money to make an investment, and they used the rest of their operating cash flow minus some other stuff to basically buy back the stock on a quarterly basis. $1.7 billion is an acceleration over the previous quarter at $1.6 billion, and last year company bought back about $2.5 billion. I'll let you decide if buying back the shares over at Netflix is a wise decision, considering shares are trading at 36 times forward earnings. And on top of that, shares are basically retesting the highs that they made back in November of 2021 when everybody and their brother was setting up a Robinhood account and just buying any 3 and 4 ticker symbol stock that they could find or was recommended by some guy like me on YouTube. Now, I've put in a fake green candle here. We were down here early in the day at about 6. It looks like we closed the day at 687. I'm seeing in the after hours, at least at the current time, we're up here closer to about $720 per share, which is basically retesting the highs that we made literally earlier this week. These are not areas where I'm overly excited about Netflix. Now, there are some people that do like to play these kind of breakouts. That is possible, that when a stock gets to all-time highs, sometimes you just have a lack of airspace and gravity goes away and the stock continues to run. More typically, though, you do have some rejections here. The first area for Netflix, if you're dying to get back into this one, it's probably back down here in the 660s. Further back, we'll get more excited about it, and we'll certainly alert you on our FANG Stock Recap show, which we do every Fridays. In fact, we'll publish one tomorrow where we'll talk more about Netflix and the other, quote, FANG stocks and big tech stocks. We do that every Friday. Hopefully you guys enjoyed today's video. Let me know down in the comments what you think about Netflix. This is certainly the best of a breed. When you look at Paramount, Disney Plus, and others, this one absolutely knocks it out of the park, but is it worth the premium? Would love to hear your position down below. Thanks for tuning in today. We'll be back again, like I said, tomorrow. Good luck with your investments.